Welcome everyone to our next session about conscious capital, investing in the next generation of changemakers. I am thrilled to have with us three stellar panelists. We have Anousheh Ansari, the world's first female private space explorer and CEO of the Xprize Foundation, an initiative to inspire breakthroughs to the world's grand challenges. We also have Dimple Sahni, who's an MD for the impact funds portfolios at Anthos Fund and Asset Management, one of the largest single office family offices in the world. And we have Tozun, co-founder and CEO of d.light, a leading provider of solar-powered solutions for the 2 billion people worldwide who do not have access to reliable electricity. Thank you all for joining us today. I wanted to start with your respective journeys in the impact space, because each of you come from very different backgrounds and you each have very unique stories. So perhaps, Anousheh, we could start with you. As I said earlier, first female private space explorer and first space ambassador. Many of us have seen the videos and the articles about what really is this lifelong childhood dream of yours come true. Could you share with us how this all came about? And specifically what I'm interested in learning about is this journey to space and how this affected you and how it really served to catalyze some of the projects that you actually launched upon your return to Earth.
Thank you. It's great to be with all of you today. My impact journey actually had multiple stages. It was sort of a cascading effect. But as you mentioned, it started with my passion for space. And I think any impact journey starts with passion and complete devotion to something that's important to you. And for me as a child, space and space exploration was that thing. But as my life was progressing, I was not going toward that goal, and I was actually going in a different direction in engineering and entrepreneurship. But eventually, I sort of took a detour and came back to pursue my impact journey in space, which was through Xprize Foundation many years ago, almost 3 years ago, when I met the founder of the foundation, and he was on his impact journey of also opening up space for everyone, people like me who wanted to experience this amazing feat that humanity had accomplished. And when I partnered with him and we became the sponsors of the foundation, I started serving on the board. That platform that was developed for specifically opening up space, not only because the experience is transformational, but because it is important for future of humanity and having access to resources in space. That journey led to building a platform through this competition that showed how we can bring money to seemingly difficult, ventures like building spaceships in your garage when you're not a government. And we managed with a $10 million prize, bring $100 million of investment in that competition to invest in the teams that were competing. So this was direct investment in the teams. And this is something that I'm talking about late 1990s and early 2000, when SpaceX, none of these companies were around, and space was not cool. No one believed that people could build things for space. So fast forward now, you have, $50 to $100 billion worth of marketplace created because of it, and you have companies like SpaceX. But what was great is, as I experienced myself going to space and being able to see our beautiful planet from that vantage point, that also strengthened my belief in we have to come together and do something, because not everyone realizes how we're all interconnected with each other and with our home planet, and how we're truly, the countries we draw on a map means nothing when you look at it from that vantage point, and how we need to set our differences and borders aside and think about how to survive on this only home we have in this universe. And that led me to my work with Xprize over the past 15 years since the winning of the prize, in using this platform and launching competitions to look at what are some of the biggest problem that faces us as human beings living on this planet that we can solve together through these competitions. So that's what we've been doing, and whether it's energy, environment, health, access to food, nutritious food, and education, all of these things are part of our mission. And we rely on innovators, entrepreneurs, other passionate people who care about these issues, and they come together and we help them through the competition, shine a light on them, shine a light on the issue, and help them build the solutions that will make a difference in this world.
Amazing. And I definitely want to talk more about the evolution of the Xprize as well over the years. Dimple, you've had many, many, many lives. You've been a social entrepreneur. You successfully exited a social venture. You've been on the board of one of the pioneers of impact investing, Omidyar. You've worked with the corporate VC arm of Unilever, and now you lead the impact investment arm for one of the largest European family offices. So there's a clear common thread here, but tell us about how your journey in the impact space unfolded.
Yeah, sure. Thanks, everyone. So nice to be here. I think my journey was very, part of it was really intuitive. I think, I'm a first generation immigrant. I moved from India to the US when I was about 6. I'm one of 2 daughters, and I was kind of raised as the proverbial son in the family. So my dad exposed me a lot to finance and to sports, and I actually took to both. And in high school, I'm proud to say I was a mathlete and an athlete. But anyway, I grew up in Minnesota, which for any of you who have been to the US, it's in the middle of the country. It's very Scandinavian. There's a lot of Johns and Jennies there. So with a name like Dimple, I knew I was different, and my skin color also made me feel very different since everyone was so fair skinned. So as I pursued my academic career, I wanted to play sports in college, and I went to the University of Chicago. I actually initially thought law was going to be my lever to change the world. I did speech and debate in high school. I was in mock trial. I really liked arguing and debating. And the summer of my freshman year was the Rodney King trial. And I remember thinking my view of justice and law was just sort of turned upside down on its head. And I realized there's a court of public opinion. People can get up on a technicality. And so I made a pivot then in college. And I thought, you know what? Instead of trying to get civil justice through law, what really makes people change their behavior is money and capital markets. So I changed my major to economics, which happens to be a good major to get from the University of Chicago. And then I went on to work at Goldman Sachs. And I think I wasn't that deliberate about my career, but more that I want to work at the best places because I want to take advantage of being an immigrant and make my parents proud of all the sacrifices they made. So just take advantage of every opportunity. But as I started to get more and more into rarefied air, which happens in financial services, from sell side banking and then eventually pivoting to venture capital, I realized, gosh, how am I ever going to compete with these gray-haired old white men? And I started thinking my competitive advantage is that I come from the developing world. So I understand emerging markets, the messiness, the chaos. I know how to oscillate between these two worlds. And so I started to focus on sectors and in countries that were considered soft or messy. And those sectors really became the foundation for what we now call impact investing, but they were fundamental sectors that weren't very sexy. It wasn't social media, it wasn't gaming, certainly wasn't semiconductors. So I just found myself naturally gravitating towards sectors which had a level of empathy, that had global reach, and that could level the playing field for people from India, which is where I'm from, and especially for girls whose parents didn't have the opportunity to go to a first world country. And so it was sort of a combination and a culmination of all those things. And then my impact investing career, as you mentioned, I've made a lot of stops along the way and experimented with a lot of platforms. And my journey led me to Europe. And I think the thing I enjoy about being in Europe is, one, I get to straddle the East and West, literally and figuratively. But working for a family, because impact investing is personal for me, since I come from some of these markets and I have been a social entrepreneur, as you mentioned, in education and clean tech, that it's personal for this family. And so they give me a lot of latitude to inform them on what's happening into the field and provide a cultural context, which if you grow up in a privileged Western world environment, you actually don't know how the impact you want to have, the intention is really happening on the ground. So that's a part of my journey. And I think it's culminated in the year of 2020, where movements like hashtag Time's Up Me Too, hashtag Black Lives Matter, and climate change and sustainability has made everyone realize, as Anousheh was saying, the interconnectedness of everything and everyone. Certainly the pandemic as well has brought everyone to their knees in a very human way. And that's why sectors like healthcare, renewable energy, which Ned will talk about, these are not cyclical sectors. These are fundamental sectors that will be really resilient in the times of any pandemic, any presidential election. And so it feels good to be doing good for the world, but I just think it's also a very solid business model during these times.
Yeah, and we'll definitely talk more about how I think for all of us, conscious investing is the future of investing, whether you like it or not. It is happening. Ned, I'd like to move on to you. Obviously, you founded d.light, which for those of us who kind of understand, have been in the impact space, is kind of one of the probably best known names in this space. Definitely for me, when I did some work with Acumen years ago, that was really kind of the company that really opened up my eyes to the world of impact investing. So I will say that you are a mission-driven startup veteran, since you founded d.light back in 2007 with the goal of providing affordable and accessible solar lighting and power systems to 100 million people by this year, 2020. So tell us about your journey and how you ended up starting d.light.
Yeah, and we hit that goal, by the way, as we did it on time. Amazing. I mean, we didn't necessarily realize that was possible when we set that goal, but we actually ended up doing it on time. Yeah, it's been quite a journey over the years. You know, I resonate with some of the things Dimple talked about. I'm also the child of immigrants. My dad immigrated from Cyprus, so I have a lot of family in the Turkish part of Cyprus. And I would go there every couple of years as a kid, and it's sort of a weird place because it's an unrecognized country. So you know, they're not part of any sort of international law necessarily. And I remember I would go there, the water would be off a lot of the time, the electricity would be off half the day, and there were just so few opportunities for so many of my family who lived there. Versus, you know, me, and I got to grow up in Silicon Valley, exposed to like lots of tech. So I saw this like massive contrast growing up, and that made a huge impression on me growing up. And, you know, ended up like in college, I changed my major 8 times. I think I haven't heard anyone who's changed it more than that, because I found that, you know, every time I started specializing, I felt really uncomfortable. And I said, you know, this is interesting, but I'm also interested in this. And I really didn't know what I wanted to do with my life. I ended up double majoring only because I cobbled together so many credits, but I got computer science and earth systems. And then, you know, worked as an engineer for like 6 months and quit for sort of that same reason. But I started a company after that. And I realized that entrepreneurship is kind of what I was wired to do. And once I started a company, you know, every day is interesting. You're becoming like almost like a jack of all trades, you're a generalist. And I found that I was just sort of wired to be an entrepreneur. And, you know, the initial business I started wasn't a social enterprise. And, you know, I would say we were kind of making people who are already well off, like incrementally happier, and which is fine, but it wasn't sort of satisfying that deep, you know, kind of discomfort I had growing up about seeing that contrast. And sort of the inequity of the world. And I was really drawn to this concept of social enterprise. And I went to business school to figure out like how to do that. And that's where I met my business partner, Sam. And Sam, he's also an American guy, but he grew up in India, in Pakistan, because his parents were in development. So he grew up, you know, mostly in South Asia, but then his work career was in West Africa. And while he was living in Benin, his neighbor's son was burned in a kerosene accident. And the boy ended up surviving, but was horribly burned. And, you know, Sam realized this is, you know, insanity. This is the 21st century, but yet you have 2 billion people who either don't have electricity or have very unreliable electricity and still are like burning kerosene lamps. It's like, it's unfair, it's unjust. When we can, have all kinds of, we can launch rockets into space and do all kinds of stuff. Why are so many people still burning kerosene for lighting and don't have access to this modern technology that we know is so transformative? So, I kind of combined forces when we were in business school, and we started d.light, and it's been 13 years now. It's been an unbelievable journey. We started out with kind of solar lantern type of products where you charge in the day, you get light at night. And then, I would say over the years, there's just been so many different, I've lived in China for a while. I lived in Africa for a good amount of time too, building the company. And we've almost built like multiple different companies. We had, initial product company doing solar lanterns. We've expanded now into doing bigger solar home systems that are financed to the customer. And actually most of our business today is products that we finance. So we are essentially a consumer finance business now. We've had to build last mile distribution. We've gotten now into financing appliances and smartphones and all kinds of stuff. So, really kind of like broadening that view of what transformation looks like, starting with light, which is hugely transformational, but then really enabling a lot of these rural families to, leapfrog the grid and go right into the 21st century and all the different kinds of opportunities those modern technologies can open up. So it's been an amazing journey. Every day I'm still learning new things. So it's it's always interesting, and that's been my journey.
No, that's amazing, and amazing that you hit that milestone of 100 million households. So what's the next milestone for 2030?
Well, I'll say 100 million people. So each household has about 4 people. But we're going for, we want to reach 1 billion people, over in the next 10 years, through a whole range of different kinds of products, not just lighting anymore, but we want to go 10x in the next 10 years. That's our goal. So, and we really feel like we're just started.
We'll have a panel in 10 years and we'll hold you to it.
Please do. We are, we're orienting the whole company on how do we 10x. So we're not shy about it. We it's one of those things too, where just like when we set the 100 million goal, we don't quite know how we'll totally get there, but I find that setting that target, it helps you, structure things in a way that you can actually have a chance of achieving it.
Yeah, it's amazing. So given the topic is around conscious capital, I want to get right into the meat of it because, again, putting some context, since I'm sitting here in Dubai and trying to do my best to kind of educate the market over here, the region here, venture capital itself is nascent. You add the impact layer to it, it takes it to a whole other level of nascency almost. So there's a level of education that's required here because it's still very two-pocket thinking driven, right? So we have very deep pools of capital lying in the Middle East, but very much one pocket for philanthropy versus one pocket for for-profit investments. What we're trying to do here is really to kind of nurture the next generation of mission-driven investors coming out of this region through various initiatives that we've done through 2020. So I'd like to address the kind of main question that keeps on arising around financial return when it comes to investing in mission-driven companies. A lot of people, especially here in this region, are concerned that when you're talking about something like conscious investing or investing in companies such as d.light or some of the companies that you've invested into, all three of you, that it equals kind of concessionary financial returns or no financial return even. So my hope is that through this panel, we're able to kind of dispel this myth. I mean, Dimple can give the LP angle. Ned, you can give your story based on the amount of funding that you've done and the types of investors that you've gotten on as well. And Anousheh as well, through some of the companies that you guys have invested into through Xprize. Please help me on this journey to dispel this myth and show the audience that just because you're investing in a company that's going to have a positive social or environmental outcome does not mean that you're giving your money away. Who would like to start?
Ned, probably you, since you have the longest running social venture.
Yeah, and I have a lot of opinions on this. I'm curious to hear what you think too. Sure. But for us, I actually don't think it's quite so binary. And for us, it has been certainly a journey. I think our earliest investors were mostly impact investors who were really looking to make an impact, but be smart about their investments. Now, keep in mind, we started d.light 13 years ago. And it has been a long journey. It's been long, it's been hard to build the company to this stage. This isn't like, you know, a 3-4 year exit path. We just got an exit for some of our early investors about 2 years ago, but that means they were in 10, 11 years before they got an exit, and they didn't get, you know, the 100x. It's not like massive home run, but they got a good return, but it's not like you know, a massive IRR for those early investors. But at the same time, they were happy with those returns. They're willing to take lower than commercial level returns because they knew the impact we were doing. And the reality is, with the kind of business we were building, we had to build multiple businesses. Like, we found that distribution wasn't there, so we had to build it ourselves. And then, you know, the consumer finance channel wasn't there. We had to do it ourselves. So there was, you know, as opposed to other businesses that might be in more established markets, you may not have as many barriers, and it can be faster to scale. But we had to, you know, lay a lot of that groundwork. Now, that said, over time, we have been able to evolve to taking more and more traditional kind of commercial capital, with, you know, more traditional, you know, commercial ROI expectations. But even then, when I'm selecting the investors we work with, and it's a mutual decision, right? We do want to find investors who believe in the mission, and that they are investing in the business model. They're not going to deviate us from that. We believe we can build a really big business and deliver, you know, great financial returns with the business we're in. But we know sometimes that means it can take longer, and, you know, we're making sometimes decisions that are, you know, long-term ROI decisions and not short-term. So, you know, we want to make sure we have investors on board who believe in that, and believe in the mission, and believe in, we know what's driving us and we're passionate about. But also, we want investors who are smart, and you know, are helping us drive a really efficient and good running business, because ultimately that's going to deliver the mission and the impact. So, you know, for us, there's been an evolution of the kind of capital we've taken over time. So that's why I say it's not totally binary, but I do get a little skeptical when people say you can have the, you know, complete mission impact and, you know, complete commercial returns from day one. That can be hard in some of these business models. There may be somewhere it can work. I think d.light is at a stage today where, yeah, you don't have to make that trade-off now, but in the early days of d.light, I think there was that trade-off. So
yeah, and I want to talk a bit more later about this trade-off and kind of the drift in mission sometimes that happens when you get a certain set of more commercially oriented investors on board who, you know, kind of drown out almost the impactness, if you know what I mean, of the business. Anousheh, do you want to jump in based on some of the change makers that you guys have supported? What are some of the kind of investors that you've seen come on board, and what are their kind of expectations from what you've seen?
Yeah. So building on what Ned said and my experience also, there is no lack of impact funds out there. They're growing like mushroom everywhere, and a lot of them, you know, when I actually talk to them, because part of the work we do at Xprize is helping the teams that come to compete to build these enterprises, social enterprises, to help get them funding and get them the support they need. So we talk to a lot of impact funds, and unfortunately, when I talk to some of them, they're not as educated as Dimple on what impact investment is, and they have commercial return sort of expectations for an impact investment. And to me, maybe the term impact investment should be changed to patience capital, because it is not that the businesses won't be profitable, but that cannot be your primary motive. Because if your motive is only profit making, well, then there are other choices that are more suited for that. But if you do really care about impact of these businesses and what they produce and how it makes this world a better place, then you need to take that into account. So I think there is a mismatch of expectation for some impact on there are others that are really educated, and it's great, and I encourage them. What we've done is just recently, because of the pandemic, we had to form an alliance of our innovators and companies and everyone who's been working with us, and try to address immediate needs, because usually we do very long-term 4 or 5 years competitions. and we cannot wait for solutions for the pandemic for 4 years, obviously. So one of the examples is a rapid COVID testing competition that we launched a few months ago, and we had tremendous success. The largest number of teams registered from across the globe. And the best part of this was we had the prize purse, I think it was about $5 or $6 million. But more importantly, a fund came together and they put a $50 million to invest in these companies after they make it to the semifinals at least. So to me, that model really worked well, and that's something we want to repeat for all of our teams. At the heart of what we do is this multiplier effect of, the competition itself can give a little bit of a seed funding to someone to build a prototype to demonstrate that the concept works, but then we rely on other types of capital to help take the company to the next level, to the growth level, and to the market and to the growth level. So I think there is a conversation that needs to happen about what impact investment means and what type of returns are reasonable returns for this type of investment. And there should be a value assigned to the impact itself. The part that also people don't talk about is in normal investment, a fund will make probably 1,000 investments and maybe 5% pay off. So, and one maybe hits it big. So that's the other part that sometimes when they talk about impact investing, they expect every impact investment they make to pay off. So there is a mismatch. Maybe Dimple can shine a light on why there is that mismatch in the marketplace.
Yeah, I mean, Dimple, do you want to jump in? I mean, you have an interesting perspective because through media, you have kind of one lens, and then through Anthos, you have the other lens. And then obviously as a previous entrepreneur, you have a third lens.
Yeah, and the family I work for now, we are doing multi-asset impact investing. So I'm investing in public equities, public fixed income, real estate, private debt, and private equity. So my portfolio has a whole spectrum of returns depending on the asset class.
Yeah.
And I'm going to be a little controversial and say, I think there's a need for all kinds of capital, subsidized capital, concessionary capital, guarantees, et cetera. It depends on what tools you have in your toolbox and what type of investor you are with your investment horizon. So I don't think there should be a negative stigma if people are purposefully taking concessionary returns because they want to catalyze, because they're putting value on something else. It's that impact premium. So in my portfolio, I have a spectrum of returns, and some of my best performers can compete with any traditional fund investment or any traditional company. I also think that the markets are going to get more efficient. So right now there's a lot of inefficiency. I think social entrepreneurs they're coming of age now. They're sort of in their adolescence, but it's not like Silicon Valley where you have a blueprint of like, hey, plug and play or you rinse and repeat. So I also think that the markets people are trying to tackle are often in emerging markets where there's opaqueness, inefficiency, everything from corruption to ease of doing business. So I think, there is going to be more challenges when you do investments in those markets. But if you're doing a climate change public equity fund, I'm telling you right now, those are outperforming traditional public equity funds. You're actually taking concession by not doing sustainability. So I think it really depends on your lens. And as an entrepreneur, I raised money for an ed tech company in the late 90s when impact investing wasn't coined and people thought social entrepreneurs were people who started nonprofits. And our tagline to VCs was, you can do well by doing good. And, we did it because we're like, hey, we're doing an education.com. And I don't know if VCs invested in us because it was the first .com boom and literally everything with the .com extension was being funded, or because some of them had this empathy and they liked that tagline of, oh, this is education, it's slightly different. Regardless, right now, I think, the stigma associated with social entrepreneurs and impact investors, it's changing by the day. And I think we just need one or two really good blockbuster exits to really blow open the misperception that you can't have market rate returns, that you can't have social unicorns. Those days are coming, and those entrepreneurs are creating those businesses right now. And Ned's being very humble, but d.light is a donor darling. He has raised he's all those tools I mentioned, debt, guarantees, grant, equity, he's used all of them. And I think, like any entrepreneur, you have to know when to use what type of capital and from what type of entrepreneur. So I think as the markets get more efficient, you'll be seeing a lot more commercially oriented social impact funds as well as entrepreneurs.
And you bring
Yeah,
up
Dimple,
sorry,
I
go
was
ahead.
just going to say it's something on our mind too. I mean, as if we can get d.light to a really successful exit, in the next couple of years, that is like this blockbuster thing. I think, we have a desire to do that for the sector as well. We've been hearing a lot from impact funds and other social entrepreneurs that we just need some proof points, to show that this is doable. So, we're passionate about trying to make that happen. COVID's sort of, put things on hold for a little bit, but I think post COVID, we're going to be seriously looking at how we can do that.
Definitely.
I want to expound on what you just said, Ned, because that exit point is like Dimple hit it on the nail, whatever the expression is in English. But I come from obviously a traditional VC standpoint, but we have launched an impact vertical earlier this year where we've so far invested in 10 companies across the world. We are looking for VC returns. So that is, and we have invested in companies that have already generated some nifty kind of multiples for us recently. So when you say like an exit, like what would be a successful exit for d.light in your mind, Ned? Would it be an acquisition? Well, would it be going public?
I would love to see the company go public, because I think we can stand on our own. And I think in an acquisition, we really have to make sure that we could still achieve that 10-year vision. I think that's more what I'm focused on. Mm-hmm. And when you're subsumed under a big corporate, that might be at risk. So it really depends on who. But I think the IPO path would be, I think, the most interesting. And we're at a place, like I was saying, where we are generating commercial returns that should be attractive. So I don't see why we couldn't do that. And I think that would be a great kind of data point for the sector as a whole. So that's something that we're shooting for, and then we'll see kind of how things develop.
Okay. And so again, back to the earlier point, I mean, all of us have seen that there are silos, right? There's like the impact investors on one end, and then there's the traditional investors on the other, and it becomes these kind of two echo chambers with very little dialogue. Until recently, to be completely honest, especially I think with COVID this year, people understand you need to invest more in education, you need to invest more in healthcare, you need to invest more in renewable energy and the environment. So we're seeing more of these traditional financial players now jumping on the bandwagon, if you will. I'm curious to hear your thoughts on the intentionality behind this. Like, do you welcome them in? What short-term and long-term consequences do you actually foresee with this happening? Do any of you have specific thoughts on that? Because it was pretty separate before, and now there's like mixing happening. You can argue that some are more well-intentioned than others, but we'd love to hear your thoughts kind of at a macro level on where we're heading with this.
In my perspective, mixing is good. From our first round that we raised, it was mostly impact funding, but we had a VC fund in there, and we wanted a VC because we wanted to be kind of held accountable to those kind of VC level standards, but we didn't want them to have control either. So we sort of balance it that way. But I think having those two voices are actually quite good. And when you look at the VC world, the PE world, that's where like you have really large pools of capital. So if you're really going to scale, you ultimately need to access that kind of capital. So for us, like, impact funding or concessionary capital, we got a few grants early on as well for some specific initiatives. And those were sort of like to figure out this, like, getting into these tougher markets or figuring out these business models, things that VCs may not have the patience for. We really leverage that capital to sort of figure that out. Patient capital, like Anousheh was saying. But I think having, all those different pools of capital is so important, because even like for one company, d.light, we've gone through these stages where we've evolved the kind of capital we need. Some companies from like day one, might be like great impact, VC level return, like go, and some might take, be a journey to get there. And some, might always be a little bit, below the commercial level or not ever really achieve commercial level, but they achieve massive impact. There should be some funding, available for that too. So I think it really is about using the right tool for the right kind of business and helping businesses evolve. And if businesses really need a lot of capital to continue to scale, they'll need to find a journey to get to that commercial level return, because that's where the large pools of capital are. I mean, that's just the reality.
No, 100%. I definitely agree that there is a value chain of funders, if you will. I mean, some of the companies that we invested into as Conscious Collective, they would have been too early for us a year ago, but that's when the grants kicked in and the philanthropies kicked in, etc. Then those players kind of pass the baton to us, and then we're kind of funding, and then we will eventually pass the baton to growth stage funds, and then that's how it'll eventually evolve. Anousheh, Dimple, do you have any thoughts on kind of what's happening this year? And you're kind of, every day there's like a new traditional, financial, not naming names, but financial player launching an ESG fund or launching an impact fund, or you're hearing all these things. And I'm French, so part of me is a bit cynical sometimes when a bit of rolling of my eyes, but I am, I'm thankful and very grateful that we're not in a corner anymore speaking to each other only, and that there's more players that are coming on, even if it's not purely intentioned initially. I think people are understanding that this is the future of investing. Do you have any specific thoughts on your end from what you're seeing, maybe Dimple from the LP side, and Anousheh, maybe what you're seeing in terms of the companies that you're supporting as well and the types of investors that are coming in?
Yeah, I would say in general, I'm in favor of the tent becoming bigger and having more people under the tent. And I think most people who were in impact investing, in the late 90s or mid 2000s, et cetera, are happy that they're not sort of, fringe anymore, that it's becoming more mainstream. But there is a cost to that. And I think, again, this is where the markets are inefficient. So if you have all the big investment banks having impact investing departments, all the big private equity shops, and even commercial banks now, right, are offering sustainable product. So I think it's good, but it's going to take time for, I think, the authenticity and the rigor of what they're doing to get better and to be where we are. So if you think about the analogy of a swimming pool, I would say that the shallow end, which is ESG, sustainable, we're going to report on what we do, our carbon footprint, whatever you want to do, that's lower hanging fruit. And there's a lot of people in that side of the pool. And that's good because you have to tiptoe your way in. But where Ned sits, where I sit, and where Anousheh sits, it's at the deeper end of the pool, which is, there's fewer of us there, but I would want other people to come to the deep end of the pool. I'm waiting, and I've been treading water for a long time. So I need some other people in there to be able to do deals with, with a lot of integrity. So I think the intention is good. People are coming into it for different reasons. One, because it's trendy. Two, because their clients are asking for it. Three, because they're having FOMO. Or four, because they've all had epiphanies during the year of 2020. And they're like, oh, wait, I need to do something more meaningful with my life. So for me, I put less emphasis on the intentionality. As long as you're getting into the game, that's good. But if you want to be taken seriously, you have to really prove yourself as you wade from the shallower end of the pool to the deeper end, and prove that the impact integrity that you're having is really integrated into who you are and what you do. So Goldman can have an impact investing department. Doesn't mean Goldman Sachs is now an impact investing bank. It's not. So, I mean, you can have Larry Fink at BlackRock saying, well, oh, we want to do only sustainable businesses, et cetera. But ask Larry Fink if he's going to turn away oil and gas business at the expense of the BlackRock balance sheet. And I don't think he would do that. So
what's it going to take for people to go from the shallow end to like our deeper end of the pool, do you think?
I think it's experience. I think it's time. I think it's proof of concept. So, if you invest in 3 or 4 d.lights and you have a good experience, you're going to want to write bigger checks and go to and try and do a multi-asset model like this family is doing, right? But I work for a family office that's 100 years old. And so we have that perspective. And I think this family invests for the long term. And so they've already been doing ESG, and they've had negative screens for a long time, right? So it goes from negative screens to ESG. to then more sustainable, and then impact investing is very intentional.
Yeah.
So, you can't get there overnight.
Yeah.
And we wouldn't expect you to, because then it would be completely disingenuous. But I'm just glad they're coming into the tent. And I think the pace of change, the delta that we're going to see in the next 5 years and the next 10 years, by 2030, this efficiency curve will become a lot more steep, I think. But I think a lot more people will get further along and come to the deeper end of the pool very quickly.
Mm.
To add to what Dimple said, but from a different angle, I think we need fundamental change in the way we approach investing in our society and in the entire financial market. The way we value things is completely out of whack with reality. As human beings, we're very short-term oriented. We only see in front of our noses. And that has caused us the problems that we face today, because we give up long-term prosperity for short-term prosperity. And I think that's a fundamental change that needs to happen before we can truly have genuine, authentic investment, and everyone then can invest. Because right now, if you're a CEO of a public company, and Ned, if you do go public, you will face this, and you have a board that sits there, and the number one priority of the board is shareholder return, and not shareholder return over 5 years, the shareholder return next quarter, then the decisions that CEO has to make in where they invest their capital, it's very limited and short-term oriented. And a lot of the work that people doing on the deep end of the pool requires that long-term thinking. Because even people who are investing for financial return, maybe they don't have all of the financial return from that company, but the work of the company has returned for them, because they may not face another pandemic, they may not face another hurricane, they may not face another wildfire, and the cost saving that they get, it's not accounted for anywhere. So I think the way we value and manage risk in the world has to shift, and then we need to assign risk to the not solving the problems that social entrepreneurs and these impact companies are solving. And once we can actually have a financial value assigned to that risk, and the risk of not doing anything about it, then I think people can truly understand what impact investment is. It's investing in the future of humanity, investing in your own future, by helping someone to fix the problems that you can't fix. And that's part of the mission that we have at Xprize, is to really change the dialogue and the conversation around that, and help people see, if you help us launch this wildfire competition, all the money that's spent in insurance and rebuilding, and all the losses that happens because of the businesses cannot get back, to work, and all the job losses and financial return losses because of that can be avoided if we can solve the problem before it becomes a problem. So that's, I think, the shift that has to happen, hopefully soon in my lifetime.
And I actually want to continue with that, Anousheh, because obviously Xprize offers major financial incentives to encourage researchers to take on things like space flights, climate change, water supply, education, etc. And now this year you launched the Pandemic Alliance with the likes of IBM, Intel, Anthem, and some academic institutions like UCLA and Boston University. And you use a term that I quite like, which is we need to move away from competition and we need to focus on co-petition. Can you explain a bit more about what the Pandemic Alliance's kind of goals are, and how that came about? I mean, obviously, aside from the fact that COVID happened, which we all know, but what is the objective for you and the ethos of this alliance?
So like any entrepreneur would do when there is a crisis, you try to figure out how to deal with it. And in our case, this was an experiment. We always launch competitions, but this time we said, okay, because of this, we know all these great people in the medical field, we know all these researchers and universities and companies. what if they all came together and focused on solving the problem instead of doing this in different pockets and silos? So the goal of the alliance was to create a place where people can share research, share data, have a conversation, help each other out. So we created a marketplace where you say, IBM can say, I can give you a few AI engineers, or Anthem can say, I can give you data about patients that are coming through our system, anonymized information to help solve the problems, and identifying where the bottlenecks are. So this was sort of the fundamental reason why we launched this, and it proved to be very successful. And we touched on a problem we didn't even know it existed, because when we brought everyone together, we have about now 300, we launched in March, end of March. We have about 392 people from 100 different entities that come together on a weekly basis. We have about 30, 40 people on each one of these 7 tracks. And the level of engagement has been so high that it's exceeded my expectations. And the reason is, they say that in their own companies or in their own universities, they're not sort of encouraged or allowed to collaborate because of IP issues or other reasons. It's not easy for them to actually share data and information. And we sort of created a platform for them to come and be able to share this data towards solving these solutions. And we've launched now 5 competitions on mask, on testing, on reskilling for job losses that has happened during COVID. We just launched a new competition on AI models that can be predictive and prescriptive in helping policymakers and decision makers determine how to balance their policies on whether they should shut down everything or shut down certain areas, or how to distribute the resources and how the numbers could change. So actually giving them tools to make informed decisions versus random decisions. And I'm very proud to say it's been a wonderful way of seeing how people come together. We've seen it in other competitions too, where if everyone's working toward the same mission, ultimately it doesn't matter if you solve the problem, even if someone else solves the problem, because you care about solving the problem, you're happy. And that's why usually in all of our competition, the teams sometimes merge together, they help each other, they lend each other's tools and data. So truly is a collaborative effort underneath the competition, all trying to get to the finish line to win the final prize.
And that's funny that you say that. I was just discussing with my colleague yesterday, because I have kind of one foot in the traditional VC world and another foot with Conscious Collective in the kind of conscious investment world. He's often, and my colleague sits on the pure VC world, he's often baffled by the kind of the collaborative kind of aspect of our world, if you will, right? Like, it's not this visceral, like, fighting for deals. What I found with, at least with building Conscious Collective this year, is that all the other impact investors that I've spoken with across the world have been so welcoming, sharing deals. Like, there's not this arduous kind of competition and cutthroat kind of dynamic that's happening necessarily. And it's more about, hey, like, so-and-so is still fundraising, they have X amount left, we invest in the previous round, are you interested? And it ends up being a lot of shared kind of diligence work, etc. And it was pretty eye-opening for me specifically this year. So very much in line with what you just said, Anousheh, as well. And hopefully that's going to stay, and that's not going to be polluted by, kind of the new financial investors coming into this space. But I'd like to bring it home now, because there's going to be thousands of people that are watching this right now, and the majority of whom are probably based in the GCC. And so all of you have been trailblazers in your respective fields, and you've all been in this space for a long time now. Here in the GCC, and you have many people in the audience who are aspiring mission-driven investors and mission-driven entrepreneurs. A lot of them are in the audience. There's vast pools of capital in the region, but the metrics and the know-how are still big gaps to be filled here. So I would love to hear your thoughts about how we can improve and how we can best grow this ecosystem here in this region in order to create the next generation of change makers and the next generation of mission-driven investors. Help us here in building this out. What should we be looking at? What should we be focusing on right now? Ooh, lots of pensive faces. Who wants to start?
I'll start. I would say, the GCC is a complicated region, which we all know, and every region has its own complexities. But I think there's a distortion of wealth and, family-owned companies and conglomerates. And, it's really hard to be a small business owner because, the opportunity to scale is limited unless, there's very few channels, right? It's not like every option is an option. But I would say if you can get one or two, start with the millennials. Let me start there. Start with the next gen because they're more malleable. And start with the scions of these wealthy families or government officials, and plant the seed in them because they're really open, I think, to things like impact investing and social entrepreneurship. It's very intuitive for them as well. And they can serve as influencers. And to the extent that people have role models and they can't look up to the existing role models because they've come from oil and gas in the region or construction, I mean, just very traditional brick and mortar businesses. I think have those young influencers find mentors outside of the region so that they make sure that they get some outside thinking inside the region. Since travel is less of a possibility, I would say things like this, virtual channels. You talked about how to build the ecosystem. In addition to things like Xprize, there's a Cartier Women's Initiative, which is only for female social entrepreneurs all over the world. Just big luxury companies that are waiting with big prizes to fund female social entrepreneurs. The Hult Prize is another one. I think their prize is also $1 million. So there's lots of these global interconnected competitions. Barclays has an Unreasonable Institute with entrepreneurs all over. So I think find out those resources, find mentors outside of the region to bring that thinking in, and then find the influencers in your region for whom this is very intuitive or a personal passion. And then they'll become the future role models and, start investing with your friends, people that you know and trust. I mean, I think the fear of that first step is the toughest thing. So I think, find comfort and invest with people that you know and trust. So those would be just a couple of tips from me.
Thank you so much. Ned?
Yeah, I think, the couple things that come to mind for me, a little bit building off of what Dimple was saying, I think in terms of bringing in sort of the know-how and the network and the that sort of thing, there are organizations like Endeavor is one that comes to mind for me that, really helps equip entrepreneurs that are, wanting to create an impact and link them with other entrepreneurs around the world that are doing good stuff. So it doesn't, have to be just the competition side. That's one, but there's also other networks that kind of encourage that collaboration and kind of cross-pollination. And I think figuring out how to get plugged into those sorts of networks would be good. And then I think there's something a little deeper, which is probably getting into kind of like a change of mindset, where I think people have to be willing to embrace failure because there will be failures that happen. And I think one of the things that's been, it's very freeing about being in Silicon Valley, this is a place that totally embraces failure. And therefore you get lots of, amazing innovations. But for every great innovation, there's like 10 others that failed catastrophically, right? So I think that, having that understanding that, both the entrepreneurs and the investors, that doesn't mean everything is going to be a win, but you learn from those failures, and actually, and that's part of the process, and that this is very much a marathon. It's not a sprint. This isn't something where the returns are going to be like there on day one. It's not going to be like the app company that makes hundreds of millions of dollars after the first few years. That's not this. At least there may be some out there. I don't want to, but generally that's not the impact investing world. But on the other side, you get an incredible sense of fulfillment, of impact, of long-term value creation that is just good for the world. And I know especially the younger generation is really craving that. I think people are realizing that just the pursuit of material wealth is a very empty pursuit, and figuring out how to be more holistic in our thinking of making a good impact on people's lives, doing something that actually works against the forces of inequality that seem to be just accelerating in our world, and that are good for the planet These are things that we need to do as a, as a human race to survive. And I think people want to be part of that solution. And business and, capitalism, these are like powerful forces. And if we can harness them for those purposes, I mean, it's the right thing to do. It's fulfilling. It, can lead to a fulfilling life. So I think that's, it's a mindset shift, but it's, it's a marathon. It's not a sprint. And people, I think, have to get into that mentality.
Great. Anousheh, last words of wisdom to share with us?
Well, I think Dimple and Ned covered a lot of the bases. If I were to add just a few more, and my experience, limited experience with GCC, is that I would recommend keep government out completely, because they add a lot of bureaucracy, red tape, slow everything down, and set the wrong expectations. So they're very inefficient in this type of investment. I think one thing that GCC has going for it is that it's a very young population. So Dimple saying, look at the next generation. Definitely, there's a lot of good minds there. And perhaps I would encourage it's one of the few regions when young people have actually significant capital. So perhaps they should form their own fund where it's separate from how their family and their parents invest, and they probably would take bigger risk and be better investors with advice, like Dimple said, and learnings from others. And then one last thing, if they're on the other side of the table and an entrepreneur, one thing I've always encouraged entrepreneurs in that region is to think big. A lot of them think locally. The business doesn't have to serve clients locally because it's a small market. So it's better if they build their businesses to serve a global market or a larger market outside of GCC. And I think that those would be maybe the last few things I would add to the great advice they got from Dimple and Ned already.
Amazing. Thank you, Anousheh. Thank you, Dimple. Thank you, Ned. This was a fantastic session. Really appreciate your time across various time zones. Have a beautiful day. And